Welcome to your daily market update for March 6, 2026. Let's look at the key market movements overnight. Global risk sentiment has deteriorated overnight, largely driven by the ongoing geopolitical conflict. The conflict has now entered its sixth day, with no clear resolution in sight, heightening market anxiety. The oil market experienced significant volatility, influencing price action across other asset classes. Oil prices continued their upward surge, creating ripple effects across global financial instruments. We are receiving reports of a possible intervention by the US Treasury in oil futures. Following these intervention reports, oil prices have pared back slightly from their session highs, but markets remain focused on further updates. Inflationary concerns and central bank policy expectations remain critical factors in the current environment. Concerns over the inflationary impacts from a drawn-out conflict are front of mind for investors. The sell-off in treasuries persists as risk-off sentiment continues to affect fixed income markets. Expectations for upcoming FOMC rate cuts are being pared back in light of the inflationary environment. The stock market is experiencing renewed pressure from both geopolitical risks and new regulatory concerns. Stocks fell again overnight, reflecting the broad deterioration in risk sentiment globally. There is added pressure on stocks following reports that the US is considering requiring permits for AI chip exports. Let's examine the dynamics in the currency and gold markets driven by safety flows. The US dollar rose amid a flight to safety trade, which consequently weighed on the price of gold. Nearer term, markets will be focusing closely on the upcoming US payrolls figures for economic direction. A stronger than expected turnout from US payrolls could place downward pressure on riskier currencies, such as the Australian dollar.